Everyone, James here, just with a really quick update of what is going on now. A night and a half ago, the Bank of America Fund Manager Survey was released. A monthly report contains a few hundred fund managers. Got a net wealth of $632 billion under management across. So when these guys have a bit of a vote on the survey, this tends to be something that you want to be paying attention to. The key points is that for the first time in a while this year, or probably actually since a long time because of what's going on, that the fund managers have actually said that we are at the start of an early phase cycle as opposed to being in a recession, which is an amazing turning point for this one. So 60% of those surveys said that we're in the start of an early cycle as opposed to being in a recession. That's great. Corresponds with similar times, different circumstances, but similar times in the market. 2009, 2012, when that crossover happened, when people said it's early cycle and not recession, tends to be the start of something big and the recovery can properly take off. I'm confident that they're right on this one. Obviously, I'm fairly bullish, just with the exception of the election coming up, fairly bullish on the market overall. The economy, different story, but the market, it's the same. It would appear that these fund managers, very similar sort of story here. When asked what the greatest tail risk is to the markets, survey said COVID, obviously, being the highest one. However, the percentage was higher than that in September, so they're seeing it as more of a tail risk. US election, the election as being the tail risk, down a touch to 18% from 23%. And the tech bubbles concerns, which we all thought the tech was going to get sold off on rising rates or breakups or just because it's a bubble and it's overvalued, that as a tail risk came down from 22 to 16%, so less of a tail risk seen by the fund managers in there as well. In terms of asset allocation shifts, the October fund manager survey says that the increase of exposure into healthcare, staples, general stocks. Japan as well, missed that. No cash to allocate into it. Talking about cash allocations, cash allocation has come down from 4.8% for these fund managers down to 4.4%. That's actually a lot if you're talking about funds under management of $632 billion. So 0.4% decrease in cash obviously means that's going into the market. More bullish indicators based on the Bank of America scaling system that they have. They see that under 4 means that exuberance and greed is really taking the precedent on that one. It's not down to that level yet, so still a little bit more to go before the market gets to those greedy levels and you want to be potentially a seller. And finally, my favorite thing, the most crowded trade for the straight 6 months preceding and this one, and 10 out of the last 12, so 10 months the last year, the most crowded trade was off record numbers. There's never been a more crowded trade in the survey than last month. Again, this month, just a slightly less of a crowded trade. US tech, long exposure to US tech is the most crowded trade according to the fund manager survey. So that's it. Overall, a fairly bullish survey going into it. The key thing that was brought out of it, and this is just finishing on the election, is that what is the biggest risk with the upcoming election? Survey said 74% of people said that. Obviously, I say, a contested election is the biggest risk to the election outcome. Not a blue wave, not a Trump in the presidency with Congress held by blue or the vice versa. No, if it's contested, that is the biggest risk. And then the question, and keep in mind that this survey was only done between the 1st and the 8th of October, so basically a week ago, or just over a week ago. Do you think that the US election will be contested? And this surprised me because I thought that fears had really subsided with regards to it being a contested election. Makes me think maybe there should be a little bit of risk off. But when asked, do you think that the US election will be contested, it was about 61% responded yes. So the smart money, the big money, the moving money, they think that we are at the start of the cycle, but they do see that the US election being the biggest risk and that it potentially more likely will be contested than it won't be. That's all for that. Thank you very much to Bank of America for the report. And anything else you want to know, send me a note. Cheers.